James, instead of asking you where treasuries go, is it a game changer if they continue going higher or not?
No, absolutely not. If you were to say that nominal bond yields were heading north of nominal economic growth, that would be a game changer. But long-term equilibrium does say that we should expect nominal yields, nominal growth to equilibrate over time. We're a long way from that.
OK, what does that mean for the dollar, Elsa?
So it means a relatively good environment for the dollar, but particularly against the Japanese yen. So we've said for some time that dollar yen is one of the most leveraged plays in foreign exchange on US rates, and that's really where we're seeing the impact going forward.
OK, is there a feedback loop that if dollar goes too high, then we see contagion from emerging markets, also with the price of oil? Is this a perfect storm? Could this be a perfect storm?
So it's interesting because dollar yen's a great example. It's typically a risk-on proxy, positively correlated to equities. But at the moment, though the correlation is strong and significant, the elasticity is a lot lower than it would be traditionally. And I think that comes back to something we've discussed before, which is the hedging behavior of domestic Japanese investors, and they're a natural bid in the dollar yen market.
James, what's your take, first of all, on a perfect storm for treasuries? And then I have a good chart, actually, on...
I don't think we're anywhere close to this being a perfect storm. I do think that yields will head higher, and I certainly don't think that 3.25 is, for the 10-year is anywhere near a break point. For example, I think that the Fed funds rate itself is going to 3.4 over the next 12 months. I don't think that we are justified in an inverted yield curve, which would signal the risk of recession, other than, of course, that global investors look at US yields and think, oh, gosh, that's fantastic in the context of deals we can pick up in either Japan or indeed in Euroland, and therefore let's continue to buy US dollar bonds. And that pressure, I think, will keep yields lower than they probably should be.
James, let me bring you over to my chart. This is a Treasury positioning chart, and you can see that speculators' net shorts Treasuries positions are at record levels. What does that tell you?
That everybody accepts that yields are heading higher, and I don't think there's any surprise. But, you know, I regard yields heading higher as good news because it speaks to the challenge of normalisation in the post-global financial crisis environment. Deeply important.